While they're grabbing their seat, Cheslyn has a BCom in Industrial Psychology from the University of the Western Cape and a postgraduate diploma in Business Management from the University of Pretoria's Gibbs. And he was appointed TymeBank's Head of Sales and Services to launch in 2019. He also became the Chief Commercial Officer in June of 2022. Dr. Lance, he is a former CEO of ABC Holdings in Zimbabwe, Managing Director of Bank ABC in Zimbabwe, and we're grateful to have him here as well. And Stephen is Vice President of Bank TransUnion South Africa, and in his role, he leads TransUnion's executive relationships across the banking sector. Good morning, gents. Welcome.
Thank you.
You want to check the mics are all working nicely so everyone can hear you?
1, 2. Yeah, I think so.
Fantastic. Please, as I said earlier, make some notes as the panel are having a conversation with us and with me. Do make those notes, and we'll make sure to try and get as much time as possible for those questions. I'll start with you, Stephen, if I may. How do you envision the role of traditional bank branches evolving over the next 10 years, and what strategies do you think banks should adopt to remain relevant?
Thanks so much. When I think of branches, branches were created historically to serve a specific purpose. The branch was the bank. So you went to visit the bank. You didn't go to visit the branch. The branch made decisions. The branch was where you did your transactions. And those things no longer exist. The decisions are not made at a branch. Transactions are largely not done at branch either. So banks have to fundamentally rethink branch, and I actually think the word branch, we should remove it. It's a lazy proxy for physical presence and human engagement. So banks are going to start to think about where and when do I need to be physically present in the market, and where and when do I need a human engagement in the market. And it comes down, in my mind, to value and relevance. So if there's value to being at the Barra taxi rank where there's 2 million feet per month, then I must be there. And why must I be there? Let's design around the why. So I do see that the national location network of branches is going to fundamentally change. And within each point of presence, the layout is going to change. You're going to see, already you're seeing that there are no more tellers in most branches, or they're moving towards no more tellers because those transactions don't exist. You're seeing the security has gone away, right? Because there's no more cash in the branch either. So it's very interesting what's happening, and I'm sure Cheslyn's going to come in with a very purely physical side, but I think there is relevance to physical presence as well. Now, is that a kiosk? Is that, if you think about your insurance broker, you go to the insurance broker to solve complex queries or to do complex sales or to get advice and to be guided. I think that is where you do need a physical presence, you do need human engagement, and then, transactional things can go elsewhere.
Dr. Lance, I just want to come in. We've heard from Loretta, there's obviously a change between what happens in South Africa and what might happen in other areas in Africa. What's your experience in a Southern African context, bringing Zimbabwe into the conversation?
I think the experience for banks is the same, really, if I were to add. And every market, every context really adopts to whatever the friction or the changes that is required in that market. And there is no one size fits all for any market, whether for South Africa or for Zimbabwe. But I think that as we're seeing the mutation and the changes in the banking sector, in my view, I think one of the greatest problems has always been friction in the banking sector, whether it's in South Africa, Zimbabwe, Kenya, as Lerato was saying. I think banks have been very, very inflexible and very difficult to change. And I've been CEO of two banks, and I can tell you for a fact that they're very, very difficult institutions to manage. Why? Because we are built on legacy and very monolithic structures and banking infrastructure. Very inflexible and very difficult to change, and very, very difficult to innovate around. So a lot of banks try to innovate around, let's say, your core banking system. That is not easy. I admire my colleagues at Time. They're starting from a clean slate. They're not necessarily encumbered by something that is difficult to manage and to change. I think one of my the greatest writers in banking innovation, Brett King, said that the greatest challenge in risk or a risk that we see in banks is actually friction. That's all, friction. I think we kind of look at banks as risk institutions. And that is the problem, because we are trying to manage banks using a 19th century model to serve a 21st century customer. And we try by all means to put friction as a reason why we can't change, or rather risk as a reason why we can't change. So if something is difficult, we say, oh, we require paperwork, right? KYC is an example. So we say we require mountains of paperwork, you know, frustrating to the customer, but it's safe for us.
Yeah.
So we are okay not to change. We are okay to frustrate the customer because we believe that we need that additional element of risk. And I think that is where the greatest innovation and change has to come in as far as the banking sector is concerned.
Yeah, Cheslyn, you're chomping at the bit here because you're coming in with a completely different angle. We'll let you loose now. How do you feel?
Yeah, no, thanks, Brad. I mean, I think it's an interesting dilemma for, I suppose, for incumbents, more so for us. So Stephen, I agree. We've got physical presence as TymeBank. Obviously, I think, widely considered as a digital bank, which are not necessarily a word I really like. But the reality is it's much easier for us to switch off our physical presence than it is for anybody else to do so. And we've actually got a timeline as to when we think we won't need it anymore. But the reality is you have to pay attention to what your market is doing and what your consumers require. So there's probably still a demand. But if I just judge a couple of books by its cover in this room, I can't imagine anybody here has been to a branch more recently, right? So the need for you or for a branch has almost evaporated. And the reality is that the customers will still go there today. They'll catch up with where your needs are or the way you behave today, and then you'll move a little bit further. So the reality is the need for them is probably going to diminish over time. And the challenge, I think, there are not only for, call it the bigger, more traditional banks, but for a bank like us as well, is that the reality is you've got to start preparing your business today for what your customers look like tomorrow. Right now, you take your kids, right? They're never going to go to a branch. Can you ever imagine them going to a branch in 15 years from now? Right? They're going to be properly digitally native, et cetera, et cetera. So their needs and the way they're going to want to be serviced is completely different to what we do today. And the question is, to what extent can your business pivot in a way that you give your customers of the future real value? But you've got to prepare yourself for that today. And I think, like Dr. Lon said, the challenge is when you've got a big business, you've built large balance sheets, large income statements off the back of doing business in a specific way. It's hard to let go of that because by nature you become a bit more defensive. And the reality is you've made big investments into that infrastructure. But it's going to be a real challenge, I think, for businesses like ours, like incumbents, in preparing yourself for what the customers of, or what your customers of tomorrow actually look like today.
Yeah, when it comes to our money, we're very risk averse, and change is going to happen very, very slowly. But we're moving towards a cashless society. How is that affecting the behavior of the consumer, Stephen?
So it's interesting, and I think the previous speaker, touched on this quite a lot, is we are moving to a cashless society, but cash is still very strong in Africa and in South Africa. And like, as you mentioned, we look around this room is not representative of South Africa. This room is representative of maybe 5% of South Africa. So there was a very interesting talk that we recently hosted, Gigi Alcock, and he spoke deeply about the informal sector and how prevalent cash is there, because in the informal sector, cash has zero cost, and cash has a role to play as a necessary friction around responsible spend. If I have that much money in my wallet, I know that that's what I have to spend, right? So as we move towards cashless, I think a couple of things need to happen, and we touched on the previous one. First of all, trust has to be there. Cost has to come down to zero. If you want to compete with cash, that's the cost, right? So you can't have a bank account fee, and you can't have a per transaction fee if you want to be truly cashless at all levels of society. At our level, it's fine. And then the second thing or the last thing that I'll say is that we need to then go through this process of educating ourselves, educating consumers, how to spend responsibly if they don't have that physical control of seeing how much is in the pocket or under the mattress.
Dr. Lance, the banks are looking to move quickly, and you can understand why. Technology is there, but you've got the consumer who's not quick to change. and you've got banks who want to service the people, but they also want to change. So you've got this kind of juxtaposition of industry that wants to move forward, but people who are slow, and banks needing to follow people and the trends. So you've got a little bit of a bottleneck.
I think because of that bottleneck, you will see that that is why there are a lot of fintechs that are chipping away at little things that banks do or things that they can do without a banking license. And I say this with respect that, you know, the mutational change that we're seeing in the industry is moving very, very swiftly towards a platformized kind of arrangement. I think we were talking earlier about open banking or something like that. Still an ideal, but I believe that in the future, perhaps the most change in innovation is going to come around data. I think somebody did mention something around data. I actually believe that data is going to be more important as land, really. And I think whoever controls the data, and banks manage data so badly. We manage data so badly. And I always give this example that if I am opening an account, a current account at FNB or at Bank in Zimbabwe, open a current account, if you go back and want to open a corporate account, you are going to be required to provide fresh KYC because departments don't cross-share data. And that is frustrating. And I think you go back to risk, right? Because corporate banking does not want to share or to have the risk of having to ask somebody else for the same data you're holding. So if you say you don't want to share data, you know, the biggest companies right now in the world are all about data. It's all about how you're managing data. And banks, by nature, have the biggest data repository in the world. We've got, you know, data around, you know, companies, businesses, KYC, and all sorts. And I think if we manage and learn how to use our data effectively, we bring the cost down, and we actually access a lot more customers and serve them in various channels and platforms, really, and allow ourselves to accelerate the businesses that we do. And after all, the only thing we're doing is selling money, right? We just need to make sure that we're selling money more effectively, more cheaply, and I think adaptive as well to the customer of today, and not how we're serving a customer that had a checkbook that they only had to open once a month.
What are your thoughts on that, Cheslyn? I mean, you're coming in as a disruptor from traditional, so what are your thoughts on that?
I mean, I think our biggest benefit that we have is I think we're way more agile than businesses who are a little bit older or bigger than us. We've got a lot less bureaucracy in our business. I mean, just in terms of number of people in our business, we are 10 times smaller than the next smallest bank in South Africa. But from an output perspective, most probably match them toe for toe. So obviously we've got the ability to do things very, very differently. But the way we architect ourselves is always about, we try and think about what we think the end will be, and like we say, future, so kind of how fast this world is moving, how it's changing, and what we need to do today to prepare ourselves for what that looks like, and that becomes really, really important to us. Data plays a massive role in our business. You know, it's very, inside the business, very few of us would refer to ourselves as a bank, per se. Obviously, our customers need to believe that we are, and that's exactly what we are to them. But in the way that we operate internally, we never refer to ourselves as a bank internally, and definitely changed the way we think about the work we need to do and how we want to go about doing it. And I think that's obviously played a crucial role in the rate at which our business has experienced growth in South Africa as well as in Asia. Our bank in Philippines is most probably growing at about 3 times as fast as the bank in South Africa is, and it's half its age today. So again, also learning from the lessons or from the things we've gotten wrong in South Africa and redeploying that into other markets. But again, our obsession is about what we believe customers will need going forward. The cash view is very interesting. Stephen, we've got a very different view with cash. You know, cash is actually, we think, the most expensive form of money. You know, because your only way to mitigate the risk of having cash is to spend it. Right? It's your only way to mitigate the risk is to not have the cash. So you spend it. So you actually lose your money faster than you actually when you don't have it. So we've actually got a very different view on that. And what we're starting to see is a lot of digital adoption, and And as bad as COVID was, for example, those kind of catastrophes actually are massive catalysts for behavior change. And South Africans by nature don't like change. So almost you need to plant some level of catastrophe to accelerate change. And often once people then adopt, they start to realize, oh gosh, this is so much better. But also what's genuinely happening is that the reality in South Africa, there's still a massive knowledge gap, call it between the 5% and other 95% as to how money works, how important the digitalization of money is, how important managing your risk profiles and what it actually means for you today, for your kids in the future, your ability to acquire assets, etc., etc. But we live in the information age, right? And that knowledge gap is closing faster today than it's ever closed before. And what that will result in is a consumer base that's going to hold the people they choose to do business with a lot more accountable for what kind of business you deliver to them. Only because they're going to know so much more, they're going to be able to ask a lot better questions. And if they're not happy with your answer, they're going to leave. And again, I say, think about who your customers are in the future. I've got a 10-year-old son. He's got no loyalty. Right? The banks, I'm assuming a lot of people here you've used it forever. It's the bank your parents opened for you or whatever the case may be. It's too hard to change, all these myths. My son has no loyalty, not even to me or his mom. No loyalty whatsoever. He is loyal to what creates value for him. Right? And the reality is that's what is going to hold people he chooses to do business with accountable to, creating value for him. So this whole archaic being defensive, I think, is not necessarily going to stand older business in good stead as we go, because customers are going to change what they want.
Yeah, and that brings Stephen to the point where banking was always about relationships. It was about trust. You'd sit down and talk to the bank manager. It was always about that face-to-face, because it's my money, I've worked hard for it. There's that trust element, and you find that certainly true with the older generation are still like that. They feel uncomfortable because I want to go into a teller, but there is no teller. It's how I always did it. How does that transition going to work as we look at revolutionizing banking when that almost trust face-to-face human part is removed?
Well, I think the first thing is you've got to choose when you remove it, because it's still relevant. So I wouldn't be in a rush to remove the human element from all interaction, and specifically in those moments of truth where someone is looking for advice and is, to your point, if they're looking for trust, it means that they are uncomfortable, they are anxious, and you're not going to get that comfort necessarily from a chatbot or from an app, right? Where fintechs do well is when I know what I want. I'll go and I'll find that app because I know exactly, okay, I know I want to send money, I'm going to go to Mukuru, I'm going to go to Mama Africa and download that app. But if I don't know what I don't know, I need to speak to someone who's going to give me advice. So I think what's really critical is that as we transition into the digital world, is that we don't forego the human element. I'll just say something. I don't think it's only an older generation thing. I think it's about at that moment of truth where you're anxious and you do not know, that you need someone that you can trust. So banks have a place in being the trusted advisor and being available to the market where the market wants him to be. So if that is online, that's fantastic. If that's not online, that's also fantastic. But you've got to be there.
Not sure if you want to add to that, Dr. Lawrence.
I agree, Stephen. I also think that banks are really falling down the rank on being trusted advisors, really, if I were to be honest. And I think that is by design, going back to the frustration that we were talking about. And I wanted to say, Cheslyn did point out something which resonates with me, that in future, no one is going to own the customer. But we spend so much time trying to build around bricks on something you will not control. I think more and more we're seeing that people are not loyal to a brand. So they are loyal to a service, right? Or whatever they can get as value at that point. So if you're giving me price, if you're giving me access, quality, or something like that, or if you give me speed, that's what I'll go with. At that point, I don't care what your brand is, as long as you're giving me the value that I'm chasing. And that is the nature of the client of today. And I guess we just need to realize where we are, the mutation of literally everything. We are fast people. We are 1 minute noodle people. We want our dating fast, right? We want everything fast. We want our food fast. So why shouldn't we have our banking fast? So yes, there is a role for a trusted advisor, and that will never go away, and I agree with you. But I think we need to merge that with the realization that there is a real change that we're witnessing worldwide in any product, in any service, and in any business.
Yeah. Do you want to add to that, Cheslyn?
And I very seldomly come and speak at conferences without being controversial at least once. So I'm going to try and do that now. Again, with the knowledge gap, I could argue that banks have been the ones that's created it. So why should they be trusted? You know, and depending on how you understand the economics of money or how you interpret the economics of money in South Africa specifically today, people with more money to save earn higher interest rates with people with less money to save. But the economics on the money inside the bank's exactly the same. Right? So in essence, what you've chosen to do, or what we've chosen to do, is to make lower margin on so-called wealthier people and higher margin on so-called less wealthier people. Like, I wouldn't trust that. And because consumers can't ask the right questions yet because they don't know enough. But when they do know enough, how do you answer that as an institution? How do you say, I chose not to pay a higher interest rate because you've got less money to save? Those people are not going to do business with you anymore. Right? So again, it's about what your customer in the future looks like. And I'm saying as that knowledge gap closes, the reality is the actual truthful answers today as to why banking structured the way it is in South Africa today are not very good answers. And I'm not sure how loyal customers will be when they start realizing that that's actually what's been happening for the last 50, 100, in some cases 150 years. So I think we've actually got a much bigger role to play in helping consumers make sound financial decisions in the work that we do. Because I think, again, they're going to move their loyalty to where they get the most value.
I'm going to keep you on the mic, Cheslyn. Let's talk about cybersecurity. We're talking about making this transition, and now you're opening yourself up to something that people in general, as a customer or a consumer, would find very scary, and they would assume it's coming from somewhere. Where is it? Some Russian is being blamed, some Nigerian is being blamed, but we don't understand, so we're even more afraid to step into this new space. What can you talk to us around cybersecurity?
I mean, cybersecurity in general is obviously massively important to us as an institution. Again, considering the way we've architected ourselves, it's massively important. We have lots of fun with very smart people all around the world that trying to compromise us every single day. I'm sure, like most any other financial institution does, if you speak to our little propeller heads behind the scenes, you know, every single financial institution must probably have multiple attacks a day. You know, it's the truth of the matter. It's about how you insulate yourself, how you protect yourself. So we've obviously, as a business, made massive investments into that and have some proper skill. But again, how that translates to the consumer side, yes, there's money is very emotive, and when people lose money, you know, they act very differently. But again, you've got to change the way they experience those interfaces again, and if you make it easy enough, convenient enough, from a user experience perspective, you start to see a lot of that dissipates. I know Lerato was saying he struggled to convince his mom. You know, you got to practice a bit more in the mirror, Lerato. I've managed to convince mine, and I think we're starting to see that a lot more. Is that call it the younger, more digitally native consumers playing a much more important role in the adoption of certain behaviors by an older consumer. Again, if I take very close to home, my son is 10, his grandmother 62. She most probably finds it a lot easier to interact with him than she does with her son. So he teaches her how to send text messages. He's 10 years old, she's 62. She's bypassed me. She's like, oh, I don't want to look silly to my son, but my grandson won't see me as silly. Right? And you'll start to see that the roles those kind of consumers start to play in the behavior that becomes more widespread, is going to become more and more important over time. And those are going to become the trusted sources of the community.
I love that. Dr. Lance, you want to jump in there on that as well?
No, I think he really nailed it. And of course, there is a balance that we need to strike. You did mention cybersecurity, but I always wonder, and I'll go back to the point I was making earlier, and as far as the changing behavior of the Western customer. I think everybody who is sitting here is much happier to give their information for free to one institution or the other, including their banking details, by the way.
Yeah.
It could be to Netflix, it could be to whatever we subscribe to. So we are already conscious of the fact that we are now existing in a world which is far more open and far more democratic, I guess, in the way that we process data. It then just requires us as financial institutions to make sure that our backends are strong enough to withstand whatever we believe are the threats that can kind of affect our customers. The customer doesn't need to see that. I don't need to see the complication behind a Netflix algorithm or an algorithm of Amazon if I'm buying something from Amazon or from whatever institution. What I simply need to do is to make sure that I'm doing my subscription, I pay my subscription, I get my service. Yeah. It's the same thing with a banking institution. I go in, your sophistication should be in the back end. And I think collectively as a banking sector, one of the areas we've really done poorly, in my view, is KYC. We were having a conversation with my colleagues yesterday with the Central Bank of Eswatini. And we were looking at if you really want to identify somebody, why do you need them to bring tons of documentation to say you are who you are? Somebody already knows who I am. I mean, do you think the state doesn't know who you are? There are systems now where you can knock on an algorithm and verify that you're Brett and that you're Lance, that you're Cheslyn. All you need to do is to have an API that knocks within central registry and say, yes, this is who he is. And if you want a certificate of authentication of that person, that can be done. But we're still insisting on processes that are old, that are perhaps not moving with the time because we are refusing to move with the time ourselves. Money is special, but it's not that special. I mean, there's nothing that means that we can't change the rules that we've created ourselves around money. And I think that the speed at which we are changing around that is a little slow. And we need to move with the times.
I'm going to finish off with Stephen in a moment, and if you've got some questions, you can get them ready, and we'll definitely open to the floor in a moment. Just on that sharing of information, are we too trusting as the consumer, and we're making ourselves easy targets out there, Stephen? What do you think when it comes to this, or are we so careful because the bank's giving us enough information about phishing and all of the other things that we need to look out for? But as the general public here, as the users of all of the services, are we a bit too trusting?
Well, I think you're seeing a swing back to being a little bit more cautious. So if you just think about, a silly example, Facebook, a lot more often now you'll see privacy settings are becoming more prevalent. Your page is no longer open to everyone; it's only open to people that you know. So people are starting to become a little bit more cautious and a little bit more educated, but there's a lot more work to be done there. But on the other side of it, it's your data is your currency, and you are going to have to spend it to get value, right? So you're going to participate in the digital economy. You're going to have to deposit tokens of your data somewhere so that it can be used and you can then participate. So I think it's not an easy answer of are we too trusting or not. We're sometimes very gullible, and if that were not true, we would not be getting the scam SMSs because there wouldn't be any money for the scammers. So it's certainly there's still a long way to go in terms of becoming less trusting, and it's about figuring out what can we deposit where in safety.
Thanks so much. Any questions? Please don't be shy. I'm seeing a question at the back there. Vanessa, I think someone has the roaming mic over there. Also a question on this side. Please raise your hand again. We don't want to miss you. Right in front here. And then in front here again.
Thanks to the panel. I think we gained a lot of insights into what you shared. I just want to make a comment around customers. One of the mistakes that we tend to do is to think that as organizations we own the customer. The customer owns itself and themselves. And the minute we start understanding that the customer owns themselves, our view of that customer and how we engage with them would start changing. The issue about the friction that we're seeing, whether it's in the banking space or fintech space, can be resolved if we start thinking about the ecosystem that serves the customer. Because it's not only a bank that serves the customer. It's not only a telco that serves the customer or a fintech, but it's the entire ecosystem. And therefore, the ecosystem needs to start also understanding that we need to have an open access to the customer. And I like one of the examples, Cheslyn, sorry, I'm going to pick on your organization. The partner ecosystem that you're driving with the retailers as well. That has also solved one problem of trust, because now you have access to a customer that is traditionally a retail customer or a TFG customer. They have a trust relationship. So at some point we need to start talking about the open access system to ensure that we serve the customer the way they want to be served, regardless of the limitation and the frictions that we ourselves have created over the years as organizations.
Thanks. I'll respond there just very quickly, because I agree with everything you said. And in understanding how customers want to be served, I'd probably say just one or two things is, and I'm not saying that you do this at all, but if you're looking to understand how customers want to be served, please don't come here to the conference. Please don't go back to head office and talk to your colleagues in workshops. So I'll often talk to my banking clients and they'll say, I've been to 5 conferences and I've seen what's happening, and we've had workshops and we know what, get out the office, get into the market. Because when I'll ask them, when was the last time you personally interviewed a set of 10 customers? Or when did you walk into your branch and, sat in the queue and spoke to your customers? The answer is never. So if we think that we're going to solve understanding customer expectations speaking here in this room, it's great that we have this, but please get into the market.
Thank you. A question over here?
Okay, so the point about cybersecurity, that's probably the biggest elephant in the room. Last year we were number 4 on the number of attacks globally. This year we're number 3. How are we going to address that? And Cheslyn, on your comment about the granny and the grandson, right? Don't you think that that's actually what's causing that gap? Because the scammers aren't going to target any of us. They're going to target those that are less digitally savvy. And they're going to target them via their lack of education on how to use the digital platforms. And I've seen that firsthand, to a point where, watching my folks, my anxiety just goes like this. And I'm thinking, you need to disconnect from this, because if I'm someone from the outside looking at you, you are ripe for the picking.
Yeah, but then you're going to disconnect from the world, unfortunately. Right? So I'm saying it's the one thing I can assure you is that the more advanced businesses get, fraudsters will probably advance it even faster. And you're never going to get rid of that threat. You're going to just get better at managing it. And I think that's the important thing. With the grandson thing, my son Joshua was probably more digitally savvy than I am. And it's hard to sit here and say that. But their learning agility versus ours are chalk and cheese. Their ability to absorb and consume information, interpret and make real use of it. You can pretend that you think you're smarter than them, but you're not smarter than them when they were 10 years old versus 10 years old. So you're probably much better educated than I am in any case. And the reality, again, the world's moving at a pace that I don't think we can keep up. They keep up with it a lot better. But like I said, is that those cybersecurity is most probably a great industry to be in, because people are going to continue investing in it. Because as we become, call it, a bit more digital in the way that we do business, obviously lending yourself a lot more to that risk inherently. But you've just got to become a lot better at how you manage it, for sure. I mean, I don't think we're ever going to live in a world where that threat won't exist. But you've just got to make sure you're one step ahead. And I grew up on the Cape Flats, and it was always about survival of the fittest. So lucky I got out. I was never a gangster, for example. But to survive from them, you need to know how to behave like one. So often your best way to protect yourself from fraudsters is to hire some of the best ones into your business too.
There was a question in the back there, I thought, earlier. Thank you.
Hi. My question is more on the role of banks around the mobile payments of stuff, because I feel that are we not being too harsh to expect banks to excel in the mobile payment space? Because I feel that banks want to make money. And when they start participating a lot in the mobile payment space, this is when you get this negative sentiment around transaction fees. Is the future of banks not just to be deposit holders, give us loans, and leave the money movement to other players? Because I feel they try to make money in the money movement space, and then this is where this negative sentiment around fees, because they have to make money from those transactions.
You want to take that one, Dr. Lance?
I don't think so. I think you are defining the role of a bank really in your entire description. We just have to do things better. I don't particularly believe that banks are poor within the mobile space. I think, though, that we are poor at developing mobile apps that are integrated to our core banking system because, kind of putting lipstick on a pig. I mean, if your backend is poor, the service you're going to spit out is poor. And I think lastly, I just honestly believe that as we are changing in trying to integrate all these things here, being attuned to you as a customer and the things that you like, the kind of service that you like. I'd like to give the example that the bank of the future for me is almost to be as intelligent as Google in the back end, right? And as easy to use so that Cheslyn's son has the capacity to use it, as easy to use as Apple and almost as intuitive as WhatsApp. So if you're bringing all those elements together, that it has to be in my face, easy to use, it has to be intelligent in the background, and I don't need to know about it. And for me, those are the combination of what I believe is the bank of the future. Thank you.
Fantastic. Any more questions?
Yes. So my question goes to Stephen. You made a very interesting analogy. When I have 10 Rand in my pocket, I can get 10 Rand worth of services. But when I have 10 Rand in my account, it might not necessarily mean that. And I think I like the remark you made that banks must bring down the cost to zero. How do you think they can achieve that? I mean, considering all the costs that they have, because even those systems are running at a cost. How do you think banks can maneuver around that one? Thanks.
I mean, that's a great question, and if I knew the answer properly, I'd be sitting on a beach. But I think the seeds of the answer are quite obvious, and you've seen what TymeBank has done by, if you start thinking digital first, phone first, cloud first, and you really embrace the innovation, the technology, the disruption that's happening out there, and let go of the legacy that Dr. Lance was talking about, that's the only way you can do it. But it's a safety net for old bankers. Their legacy processes and infrastructure, it feels safe, right? But your point is absolutely right. It comes with a massive cost. And this is why the fintechs have come in and are able to provide services at a much lower cost. Look, a lot of the cost that the fintechs are avoiding is regulatory cost and compliance, right? And the banks don't have that luxury. So that's a bit of a problem. But there are other things that you can do. So for instance, there's massive interchange costs that the banks charge each other. And I don't know this for certain, it's my own hypothesis. What if we cancel those out? You probably wouldn't lose out net, because what I'm charging ABSA's charging FNB, and FNB is charging Standard Bank. And, what if we just got rid of them? All the interchange costs at the back end that we charge each other, and pass that onto the customer. That might be something. But your fundamental question goes to the infrastructure is costly, and you're not going to drop that cost unless you drop the infrastructure. So what's the different way of doing the infrastructure?
Can I just throw a question to him as well, very, very quickly? And I totally agree with what Stephen said, that you have to drop it to zero. But the only way you can do so is if your backend platforms and system infrastructure is right. Why is Google the richest company in the world? The service they offer is free. But it is the richest company in the world. And the only way they have managed to do so is because they are monetizing their platform and doing something in the background with the infrastructure. They service all of us in the world. what kind of platforms and systems do you think they're using? Are they using T24, PlexiQ? Obviously, they're using something a lot more sophisticated, but they offer you a service for free. So we just need to organize ourselves better, in my view.
We've got time for one more question. My apologies, we're going to try and squash two, and any more than these two, if you don't mind just connecting with the gents during a networking opportunity. Thank you.
Yeah. Actually, I just want to comment on the expensive nature of running the banks and the infrastructure, especially the core banking platform. And the reason why, especially in Africa as a whole, that cost is 3 times the cost of what it takes to run a similar bank in Europe or in North America or even in Asia. And the reason for that is African banks are very conservative in the way they run their banks, and they have really never prioritized technology as an equal in running those banks. Most African banks are run from the business perspective. Business folks run the bank, whereas if you go to Europe or you go to North America or Asia, technology has actually become an equal partner in running that bank. So when you look at it from the technology point of view, like Larato was saying, right? You now look at technology as a business investment, and you do the cost-benefit analysis on it. Buying a core banking platform costs X, and usually that X, or even the banking application or database, banks can afford it. But how do they maintain and support that application is where it becomes expensive. Because the publishers of that technology, that's where they make their money. They support the maintenance. So as a technology person, sitting with the business division or sector of the bank, and then looking at that technology, right? There are efficiencies that you can basically create if you really want to transform your bank technologically. You can bring that cost. You can look at not the publisher's support and maintenance, but you can have a third-party support. And that can substantially, you'll be amazed how about 50 to 70% of that cost can actually just melt off your P&L. That way you can take that money and reinvest it. And this is actually how European banks have been creating those efficiencies for their customers and passing those savings over to their customers. So if banks save a buck on a particular transaction, they will pass some of that savings over to their customers. But if you don't prioritize technology and you actually invite your technology or your CIO or your technology director to be an equal partner at the table with the CFO and the CEO, definitely you're going to defer your digitization, you're going to defer your automation, you're going to defer trying to make your banking more efficient and making it easier for your customer base to utilize it, because you're always looking at the cost. It's too expensive, I can't do it. But it's really very simple, you can do it. Just invite technology at the table and then look at it from the cost-benefit analysis. And then look at what are the seamless ways that you can deploy that core banking platform or that database or interoperability between the databases, because they are, all of that data sit in silos and nobody knows about it, right? The right hand doesn't know what the left hand is doing, and you ask your customer the same data, like you said, all over again. And it frustrates the African consumers. So they shy away from using the platform. But, with time, I'm sure all of those kinks and all of those hurdles will be identified. And the moment technology comes to the table, it can solve the problem.
Thank you so much. We're going to end it there. If you'll have, I know there was still a question or two, if you don't mind connecting with the gents afterwards. Otherwise, we're going to be stealing time away from the other panels this morning. To Cheslyn, Dr. Lance, and Stephen, thank you so very, very much. A round of applause for them. Thank you so much.